Hi, good morning. So, as many of you probably know, Trump signed into law late last night the new stimulus bill. And so I've already spent a couple hours diving into it this morning and kind of trying to understand what it means for not only business owners but also individuals and everything that's in there. So couple things. This video is going to be a little long, but for those of you that are individuals, I will let you know when we're moving into some of the business related stuff so that if it doesn't apply to you, you can jump off at that point. But I'm going to try and hit some of the highlights of this that I've uncovered already. So couple things as you're coming in, please let me know that you can see me and hear me. I'd love to have you drop in the comments if you are a business owner or just an individual, so I know who we have on here and I can make sure that we're getting those updates and hitting those points for you. And then also, if you have been talking to any of your friends, if they're wondering what's in here and what's covered in this, please tag them in this or share this out so that people are getting accurate information, because there's always a lot of bad information stemming around these types of things. So first, let's just kind of state that this bill is over 5,500 pages long. There's a lot in here that does not relate to the Stimulus Act or to stimulus payments. There's a lot in here that doesn't relate to PPP, but we're going to make sure we touch on the ones that I have found relevant as I was digging through it this morning, and some of the continuing education stuff that I was looking at already. So again, we're going to cover the individual stuff first, and then we're going to jump into the business stuff. So let's talk stimulus checks, because, and I apologize, I have a list of notes over here to make sure I don't miss anything. So let's talk stimulus checks, because I know that is probably the most pertinent thing to many of you watching. That is probably what you were wondering about. That's what you are asking, like, what is going on here? So a second round of stimulus checks is set to be sent out. The IRS last week, when this was a bill waiting to be signed, it said they thought they'd start sending out checks this week. However, with this just being passed yesterday, I don't actually see that happening, but we could start seeing stimulus payments go out as early as in the next couple weeks. But I don't know when those are going to get sent out, and I don't even think the IRS really knows. It's just a target date right now. The second round of stimulus checks is going to be $600 per taxpayer and per dependent. So this means that if you're married filing joint, you could be eligible for up to $1,200 for you and your spouse. If you have kids, you could be eligible for up to $600 for each dependent on your return, as long as they are under the age of 17. If they are 17 or older, you will not get that stimulus check for them. So this is where you need to really talk to your tax professional and find out if it makes sense for you to still claim that person, or if it makes more sense for them to claim themselves and be eligible for that stimulus payment on their own, because you would not get it otherwise. So that's $600 per taxpayer. There are phase outs on this, just like there were in the first one. So the phase outs begin at $75,000 for single and married filing separate filers, at $112,500 for head of household filers, and at $150,000 for married filing joint filers. If your income is above that amount, it'll start to reduce your stimulus by $5 for every $100 over that limit. So what this means is that if your income is more than $12,000 over that phase out limit that I just mentioned, then you are actually not going to get any amount of a stimulus payment. Now, the first stimulus checks were based off 2018 or 2019 tax returns, depending on what had been filed when they were processing to see if you were eligible. Now, these new ones are only going to be based off 2019 returns. So if you have not yet filed 2019 taxes, it is going to be absolutely imperative that you work with your tax professional, or if you do your own taxes, that you get that done as soon as possible, because that is what these are going to be based off of. And if you follow any of my stuff, I think it was about 2 weeks ago I put out that the IRS is something like 7 million tax returns behind, and so they're months behind. So you want to get this filed as soon as possible for yourself. All right, so that's the stimulus checks that are coming out. Now, this credit is what we call an advance credit. So for those of you that were around in 2008, I think it was, when we got the stimulus check that was reconciled on our 2009 taxes, very, very similar, where you got it ahead of time, but then you have to report it and what you received on your next year's taxes. So in this case, when we file 2020 taxes, we're going to have to reconcile this credit. You're going to have to plug in. So there's two things that could happen here. Either you received less of a stimulus based on your 2020 taxes because maybe your income went down in 2020 compared to 2018 or 2019, which the stimulus was based off of, or maybe your income went up in 2020 and you're eligible for a smaller amount, or you weren't eligible at all. So let's cover both of those scenarios really quick here. So the first scenario, that you're actually eligible for more of a stimulus than what you received as an advance. What's going to happen is this is what we call a refundable tax credit. So it's going to go on your tax return as a tax credit to offset any tax you owe. And if that offsets down to zero, you get it as a refund. It could increase your refund. It could decrease the amount you owe. It just depends on that final circumstance on your tax return. But if you were eligible for more than what you received, you will receive it as a credit on your 2020 taxes. Now, the burning question that we've been getting is, what if I received more? What if my income went up in 2020? What if my child turned 17 in 2020? How does this work? So right now, as the law reads, if you received more of a stimulus because they based it off 2018 or 2019 taxes than what your 2020 taxes would mean you were eligible for, you do not have to repay the stimulus. So that is good news for those of us that might have had an income increase in 2020 or had a child age out in 2020. So if you received more, you do not have to pay it back. Now, everyone who received a stimulus payment should have received, it's a notice 1444 that would have came from the government. I think I'd have to look back at mine. I don't know that it actually clearly stated it came from the IRS, but it did. But it's notice 1444, and it basically tells you how much of a stimulus payment you received. You will need that amount to file your taxes. So if you're using a tax professional, you're going to want to provide that notice with it. If you're not using a tax professional, if you do it yourself, you're going to need to know that amount. If you don't have that notice, that's fine, but you need to do your research of going through your bank account, going to the IRS website and seeing what you can find to know the exact dollar amount of what you receive, because that's going to be important. And I truly believe, it's not been said for certain, but I truly believe if that number is off even by a couple dollars when you file your tax return, I think it's going to delay refunds quite a bit, because the IRS is going to have to dig into this. So just make sure that you have that piece of it correct. Unemployment benefits, that was part of this stimulus bill that was passed. The enhanced unemployment benefits were reinstated under the new bill, but they were reduced to $300 a week instead of $600 a week. And this new amount is valid to be paid out through March 14th of 2021. Now, there's no indication as to how states are going to implement this, when it's going to roll out, because I know many people that were getting the enhanced benefits that lapsed last week. And so I don't know if you will get the enhanced benefit this week for the final week of 2020. I don't know if you'll get a back benefit. I'm not an unemployment expert. I do not know. You will need to contact your local unemployment office to find out on that. But I did just want to say that the enhanced benefits are being reduced to $300 a week instead of $600 a week. There was something in here about for self-employed individuals, that being $100 a week. I could not clearly understand in reading through, and I'm trying to wrap my head around it a little better. But there's $100 amount for self-employed individuals. I don't believe this is an addition to the $300. I think it's instead of the $300, but I don't know for sure, and I don't promise either way on that. I just know that self-employed individuals, there was a $100 a week amount and a $300 a week amount for the enhanced benefits. Again, I'm not an unemployment expert, so I don't know exactly how that works, but wanted to make sure that I gave you that information. Charitable donations. So if you take a standard deduction on your tax return, which after the Tax Cuts and Jobs Act, most people do because of the higher standard deduction amount. You can take what we call an above the line deduction for charitable donations for $300 per taxpayer. When this initially came out in the CARES Act, it was $300 per return, but now it is $300 per taxpayer. So this means if you're married filing joint, it is $600 that you guys can take, as long as these donations are made in cash. This does not count for Goodwill or ARC or thrift store donations, any donations of goods or services. It has to be cash donations, but you can donate up to $600 and have that deductible on your tax return. So that's something that Many people have kind of held off on doing charitable donations, and they lump them into 1 year for tax planning strategies. So if this is something that you've been holding off on, know that you can do 600 this year if you haven't already done that, and you can get that even if you take a standard deduction. Also in this, if you give generously, which we know several people that do, in the past, you've been limited based on your adjusted gross income. So your AGI, you've been limited on that as to the amounts that you can give and actually have them deductible. So a lot of people have ended up with rollover deductions, rollover contributions that are not deductible in the year they make them. Now, part of this new bill says that in 2021 and 2022, so this is not in 2020. Let me double check my notes here because now I'm second guessing myself. Sorry, 2020 and 2021, not 2022. So in 2020 and 2021, you're now allowed to take 100% of your AGI as charitable deductions without any limitation. So if you are a generous donator and you donate sometimes up to the amount of your adjusted gross income, then you will not have that limitation this year. So if you're a generous donator, you may want to talk to your tax professional in the next few days here to see how that might impact any year-end tax planning and tax payments you might need to make. Tuition and fees deduction has been eliminated. So if you have college-age children, the Lifetime Learning Credit and the American Opportunity Credit are both still available, but the tuition and fees deduction has been eliminated, and the phase-out amount on the Lifetime Learning Credit now matches the American Opportunity Credit. Not going to go into that a lot here. If you're a client of ours and you have questions, reach out. If you work with another tax professional, reach out to them. If you have college-age children, to see how this might impact you. Retirement distributions for COVID. It appears that these will be penalty free if you are not of age 59 and a half when you can take it out penalty free, as long as you are in a disaster area. Well, with COVID, the entire US has been deemed to be a disaster area. Now, I am looking into this because I believe there is more fine print that I have not made it through yet on this component of it. But just know if you did take a retirement distribution this year, you may be able to take that out penalty free. And there are some stipulations that came in the CARES Act where you can pay that tax bill on that over 3 years. So if that is a situation that you are in, please reach out to your tax professional if you did take a retirement distribution, and make sure you're talking through your options. And sorry, my neck's cracking. And what that looks like for you, to make sure that you understand what your potential tax bill on that might be. So those were our individual things that I wanted to hit on. So if you were just on for the individual components of what was in this act, you're covered. We've covered that. Now we're diving into some business items. So if you're a business owner, you're going to want to stay tuned because this goes into some of the PPP funding, SBA loans, lots of stuff here. Okay, so pardon me, I've been talking nonstop all morning about this, and apparently my throat is feeling it now. So, all right, PPP expenses. When the CARES Act originally came out, when Congress passed this, we truly believe their intent, and they've even stated their intent, was that this was not, that the PPP loan that you got was not to be taxable income, and that you were not to lose deductibility of expenses. But IRS came out with some notices midsummer that said, no, PPP expenses are not deductible to business owners if the income is not taxable. In this new bill, Congress clarifies this and puts into law that PPP expenses are deductible. So for many, many business owners, this is going to be huge, because as we've been working with clients this year, and we've seen that the PPP funding come in, and then some of those expenses being paid, but they're not deductible, we've actually seen some skewed profits on paper for business owners because of this, because they weren't able to deduct these. And for some businesses, for bigger businesses, this was to the tune of thousands and thousands of dollars difference on a tax bill that they would end up paying. Now, in this new bill, these expenses are deductible. This is huge. So if you've already made your adjustments on these in your books, you can now go back and reverse those adjustments to make this deductible. For those of you that are watching that are clients of ours and we do your bookkeeping, we will be making these adjustments for you over the next few weeks as we're diving into your books with December stuff and making sure those are corrected, so that when we're telling you your January 15th estimates, we're making sure that we're accounting for those expenses on there. So great news there. Super, super excited to hear that piece of it. Yes, so Kristen, I'm still diving into that piece of it a little bit with the retirement distributions. So that is, I will update this as soon as I get a chance to look into that a little more, because like I said, this is a 5,500 page bill. I've skimmed through it, pulled out the highlights. I've done some continuing education classes on it already this morning. And unfortunately, I've done 2 classes this morning. We're getting some different information on this. So I'm being very hesitant on the information around the retirement piece that I'm offering, because I want to make sure that I'm giving advice that I know is correct. So I will dive into that a little more and update on that when I do. Okay, so PPP expenses are now deductible. Okay, streamlined PPP forgiveness applications for loans up to $150,000. This application is expected to be released by the SBA before the end of January. I think they had 24 or 25 days to get it out from the date the bill passed, which was yesterday. So late January, by then we should see this new application. Now, there's been some confusion around this. This is a simplified, streamlined application. It is not automatic forgiveness. You still have to qualify for the forgiveness. You still have to have used the funds in the appropriate way. You still have to have done all of that. This is just a streamlined way of forgiveness. Okay. We're going to come back to that. Full deductibility of business meals for 2021 and 2022, not 2020. So business owners, you know that when we spend money on meals in our business, we've always been limited to 50% of those as deductibility, with some exceptions in there, but for the most part, 50% limitation on deductibility of that. Starting January 1st for 2021 and 2022, these will be 100% deductible as long as the meal is provided by a restaurant. So just know, I'm sure there's going to be some clarification on exactly what that means. I've already been asked if caterers are included in restaurants. I'm not sure. I don't know. But just know that moving forward, these meals, as long as provided by a restaurant, are 100% deductible. As I dig into this and understand if there's any nuances to this, if there's any loopholes in this, if there's any fine wording that we need to be aware of, I will make sure to update you guys on that as well. Payments made on SBA loans. So the initial CARES Act deferred payments for people who already had an SBA loan, and the SBA made those payments of principal and interest for the business owners. It was unclear if that was going to be taxable to the business owners. In this new bill that's been passed, it is very clear that these are not considered taxable income to the business. So if you had a SBA loan prior to anything COVID related, just know that any payments made by the SBA on your behalf are not taxable to you. Now, second round of PPP funding. This is what everybody is asking about. This is where all the questions have been coming in since like Wednesday of last week, when we started to know that this was eventually going to be signed into law. Benjamin, can you clarify your question about recommending small business on there? I'm not sure what you're asking exactly. Mandy, I will update on that as I get to it. Okay, second round PPP funding. So there is a certain amount of money, and I'm not sure of the exact dollar amount off the top of my head at the moment, that has been allocated towards a second round of PPP funding. But there's going to be some stricter qualifications on this. So in order to qualify, you have to be able to prove that your gross revenues in any quarter of 2020 are 25% less than that same quarter in 2019. So if we look at first quarter of 2020 as our qualifying period, we have to be able to look at first quarter of 2019 and say, yes, our gross revenues are down 25% for that quarter. If you use second quarter, you can use second quarter. If you use third quarter, third quarter. You cannot yet use fourth quarter because fourth quarter is not complete. Now, this has to be at the time you apply. I don't expect banks or the SBA to be ready to start accepting these applications for at least another week at the earliest. We will be watching that very closely. But if fourth quarter is completed by the time you apply, then you can use fourth quarter as your qualifying period as well. if you started your business in 2020, we've been asked this question already, how does this work? How does this apply if we just started our business in 2020? So we don't have any numbers in 2019 to compare to. So the way this works is that you'll need to provide that the second or third quarter gross revenues are down by at least 25% from the first quarter. So just because you started your business in 2020 does not mean that you're automatically out of the second round of PPP funding. You just have to be able to prove that your revenues are down by 25% from first quarter to second or third quarter. That is what I wanted to make sure we covered today. That is what I have unburied out of this bill already. This is what I've been kind of reading through and studying all morning so far. So if you have any questions on this, please feel free to drop them in the comments. Send me a message. If you're a client of ours, you can send us an email. And please keep an eye on my page. I will be updating, doing lives as I find updates, as I find more pertinent information, as guidance comes out and we understand a little bit more about this. I will definitely be keeping you guys updated through my lives. So please make sure to watch for those. And if you have any questions, let me know. Otherwise, I hope this helped answer some of your questions that I'm sure almost everybody is having initially this morning. And again, if you have any other questions, just reach out and let me know. Have a good day, guys.